Today, we're going to talk about understanding not only your job offer, but what all a job offer entails and the budget you should be considering as you get job offers. So first, let's just talk about salaries in general, which I think is a lot of times the main way that most people make a decision. I'm going to convince you why that's not the best way to make a decision, but we'll get there in just a moment. So salaries. The US median salary is around $56,000. In South Carolina, it's about 49. And as an entry-level student leaving Clemson from our business school, there's some different numbers out there, but 52,000 seems to be kind of a fair understanding of what we would expect you would make on your first job leaving Clemson University. So with that being said, what does that look like? I think a lot of times we don't necessarily think about how taxes really impact the money that we financially get to bring home. So let's stick with the $52,400 salary. That is kind of a median leaving the Clemson Business School. So what does that get you? There are plenty of online tax calculators that will allow you to see how much you will take home depending on where you work. There are taxes at the state level, the federal level, and also the local level. Taxes in the Southeast generally tend to be less than the rest of the country. And also taxes in more rural areas tend to be less than, let's say, taxes in bigger cities. So here I just ask, if I make that much money and I want to live in Greenville, how much will I actually take home? So what I found is that my take-home pay after all my taxes are pulled out is likely somewhere around $3,250 a month. So let's see what that gets us. Well, first thing that most of us will be spending a big chunk of our money on is clearly rent. As you can see here, rent varies wildly depending on where you want to live. So in Chicago, it's around $2,200, average one bedroom, New York City, $4,000, Greenville, $1,300, national average, $1,700. Housing, as we know right now, is outrageously expensive, and it's something that you need to consider when you are thinking about your job offer. Because first, before you can even consider a job offer, you need to understand how much money do I need to make in that city. So let's say you decide to move to Greenville and you make that $52,000. Let's see what all that buys you. So you rent a one-bedroom apartment, and this is on the lower range. This is kind of the average, but probably lower. $1,300. Utilities, you can expect probably anywhere from $100 to $300. So I stuck us in the middle. Internet and cell phone, at least $150. These are all very conservative numbers. Gas, food, again, very conservative. If you want to go out, so restaurant, drinks, maybe the gym, I don't know what all your lifestyle, those weekly things look like, but that's just a couple $100 that we have for that. If you pay for your health insurance, and we're going to talk a little bit about that in a moment, maybe a couple $100 a month. The average college debt payback is around $400 a month. That's why I stuck that in there. Some of you might not have that. That's great. And then miscellaneous things, like maybe you want to do clothes, buy a piece of clothing, something like that. Gaming, I don't know what your hobbies are. But as you can see, this is a fairly conservative estimate of a kind of a typical life that most of us live. With that $3,250 that you take home, that leaves you with nothing. And I'm not saying that to scare you, but I'm saying that to show you how quickly a decent amount of money can go because life is expensive. So with it leaving you $0 a month, what happens when you need a car or if you have a car payment? What happens if you want to buy a house or go on some travel? Maybe you go out more than or buy more things than a couple $100 a month. You definitely want to save for retirement. Everyone needs emergency savings. So all these things are factors where I would suggest you need to do a budget before you can even really think about what does that salary buy me in that city. Now, a lot of us are having money issues. So we know that 1 in 3 adults are having trouble paying expenses. And a lot of you may be thinking, yeah, but that's people that make less money. But as you can see here, people making $50,000 to $75,000 a year, 1 out of 3 of them almost are still having issues paying their bills. When you go up higher, of course, it becomes a little bit less, but even people making almost $100,000, 1 in 4 are struggling with paying bills. And we know that 6 out of 10 Americans have less than $500 in savings. And that can be really dangerous because what if something happens to your car and it costs more than $500? You're going to have to put that on a credit card. And credit cards have really high interest rates. So you can see how it's so important to have that emergency savings. So now we've thought a little bit about the budget, but how do we figure out if the job offer meets that budget or if it's the best offer? Let's say you get more than a couple offers. It's important to remember that it is more than just a salary. A lot of us focus just on the number and go, yeah, they're giving me more money, I'm going to go there. But giving you more money should really depend on a lot of different things because as you can see, what we're about to talk about, what looks like more money may not actually be. Now, when you get a compensation package, it usually involves at least 3 things, if not more. Salary, which is what a lot of people make the decision on, health insurance, and a 401k, which is really your retirement package. Let's talk about each one of these things. So first you have to think about, like I said, your salary based on location. As you can see, I've provided you a lot of cost of living calculators, but let's say that you're making $56,000 in Clemson. To have the same lifestyle in the suburbs of Atlanta, you probably need at least $65,000. To live the same lifestyle as making $56,000 in Clemson, you need to make somewhere between $100 and $150 in New York City. So the first thing you want to do is really calculate, what do I need to live based on the location that I will be living in? You also need to think about when you look at your salary, so you have the actual number, right? So let's say a salary of $75,000. But you need to factor in how many weeks of vacation you get. Is there a bonus tied to that? So for example, $75,000 in 2 weeks vacation versus 4 weeks, you're going to make different money. So before taxes, if you make $75,000, 2 weeks vacation, and a bonus that is likely to be hit of 5% salary, then you're making $1,575 a week. But if you change the actual amount of time vacation-wise, when you do that computation, $75,000, 4 weeks, and 10% of salary is $1,718 a week. So my point being, your vacation, the vacation that you get is time that you are not working, yet you're still getting paid for it. So you need to do the computation not only on just salary, but you need to be looking at vacation and then also asking about any potential bonuses and what are the likelihood that you will get those at the end of the year. Bonuses, especially in sales, are very common. Also in other, let's say you're in supply chain or you're in operations, maybe it's having a decreased amount of issues on your line. But point being, a lot of roles and positions have bonuses attached to them that are really performance-based in the sense of how did you do over the last year. Now, even if they don't though, paying attention to that weeks of vacation and doing the computation off of that is important because your time is your money. The other factor that I talked about that's important is health insurance. Now, some of you all will probably stick on your parents' health insurance till you're 26, but at 26, you have to get off. So this is something you need to at least be considering when you get a package. So you should ask them for, can I please see the benefits package for my insurance? Now, insurance, I'm going to give you just a really quick overview of how insurance works. So it's similar to car insurance the way it's structured in the sense that you pay a premium every month, regardless if you use it or not. So whether you crash a car this month or whether you don't, you are still paying a certain amount every month. Most insurance plans for an individual are somewhere between $100 and $300 a month. So for example, myself at Clemson, I think I pay $140 something a month for my insurance. And I pay that regardless if I ever step foot in a doctor's office or not. Now, when I do step foot in a doctor's office, I still have to pay money called a deductible. What a deductible is it's that minimum you have to meet per year before your insurance really kicks in. So for example, let's say I go to 20 doctor's visits and each of them cost $100. I have to at least pay $2,000 of that cost before my insurance will kick in. There's also something, thank goodness, called an out-of-pocket max. So what that means is, God forbid something terrible happens to you and you have hundreds of thousands of dollars worth of surgery and you life flighted and all these things, the most you will ever pay is $4,000. So the best case scenario in this situation, you never step foot in a doctor's office. You still pay $2,400 a year of that premium, $200 for 12 months. The worst case scenario, you spend at least $6,200. So why is that important? Well, it is not uncommon for companies to have really high premiums of health insurance. So for example, if you are going to go out on your own insurance and one company that gives you, let's say, $75,000 as a salary, but their insurance premium is only $100, the other company is $500 and you have to have insurance, it's not really an option. That is a $400 difference per month or $100 per week. So you need to be considering that. So do not hesitate. You should be asking for all of the benefits package with the numbers from the company that gives you the job offer that potentially you're considering working at. And the reason why I said you have to have insurance is because even little basic things such as stitches at a minimum cost a few $100. So as you can see, God forbid something terrible happened to you, you could end up with as much as a mortgage payment worth of medical bills. So insurance is one of those necessary evils, similar to your car, right? If you don't have insurance on your car and you wreck it and you total your car and somebody else's, you now have at least $100,000 worth of debt that you have to take care of. So insurance should be considered, even if you're going to stick on your parents, because a lot of you in a few years will shift off of your parents. At age 26, you have to, and then you're stuck with this premium bill that you didn't really think about. The last component that most companies have, and not all, so do not assume that a company has a retirement program, especially through COVID and some different downturns. 401ks were some of the things to go so that companies did not lay off their employees. So what's a 401k and what's matching? So if your company offers a 401k, that's great, that's fine, but that's not really as exciting as matching. So 401k and matching is the idea that the employer contributes a certain amount of your retirement savings to that plan based on your contribution. So what I mean is, let's say that a company, whenever they're trying to convince you to come work for them, they say, we match 5% of your retirement or 401k. So what that means is, if you make $50,000 and you put in 5% directly to your retirement, which would be $2,500, you can see it right there on the right-hand side, your employer will also match that and will put in another $2,500 directly to your retirement. Now, this is great in the sense of that's $2,500 extra dollars that you can say you can add onto your salary. But the problem is you cannot access it directly. It is going into a retirement plan that you cannot touch till you are probably in your 50s or 60s, or if you do, there's a huge penalty to doing that. Now, you're welcome to put more away, but the matching, what that means is, like, this is the max as an employer that I will match that you contribute to your retirement. I would say a typical percentage is probably around 3, maybe to 5, 6 are great matching percentages, but don't assume that your employee matches at all. And you need to ask about, what are the benefits regarding retirement at this company? It's important also to think about in that 401k, something I wish I had known when I was younger is how important it is to invest early. So I won't give you a whole spiel on compounding interest in the sense of compounding interest. All that means is over time, the interest compounds in the sense of if you get $3 for $100, let's say it's a 3% interest rate. So that means if you put in $100, the next year you'll have $103 because it's a 3% interest rate. But the next year it's 3% of that $103. So instead of $3, you get a little bit more than $3. Well, you can imagine if it's a whole lot of money over time, what a difference that would make. So let's look at these two investors. I am not a financial advisor, so all I will say is that invest as soon as you can, because time is your friend when it comes to 401ks. So investor one here starts at 25, sets aside $5,000 a year just for 10 years. Now, I know a lot of you cannot do this, and that's fine. But let's say, that last example, you put in $2,500 and your employer puts in $2,500. So there's $5,000 a year. You do that for 10 years and you don't ever make another investment after 34. You will have $787,000 by the time you're 65 because compounding interest is your best friend in the 401k instance. Now, it's your worst enemy when it comes to credit cards and loans, but it is your best friend when it comes to 401k. Investor 2 doesn't start saving till 35. Invest $5,000 for 30 years. So investor 1 was only 10. 30 years, this investor 2. And at 65, they still only have $611,000. So my point is just simply invest in that 401k as soon as possible, even if it's just a couple $100 a month. Do the best you can. If you can max out the matching of whatever your employer matches, do that. It's so wise. So now that we've considered salary, insurance, and matching, let's look at 2 examples here. So let's say that company 1 gives Sam $100,000, but their insurance plan is pretty costly. There's no matching. When I do the math on that, that's about $94,000 for that specific package. That's about the value of it, because you have to pay the $500 a month premium, right? So I took off $6,000 from that $100,000 because now you got to pay that because your company has a more pricey insurance policy and they don't match. Now you get 2 weeks of vacation. So when I do the math there, Sam's package at $100,000. So if all you consider a salary, you're going to take that package in a heartbeat, right? Is worth $1,880 a week. Now Fender gets an offer that's $80,000, but the insurance and benefits are really good. The insurance premium is only $100 a month, and they have outrageous matching. And this does happen. The university I came from had anywhere from 10 to 16% matching. So when I took my job at Clemson, because the matching is significantly less, I had to really think about that because that does make a huge value difference on my actual total package salary. So if Fender gets $80,000 salary, but then they find out that their insurance premium is only $100 a month and they have 10% matching, which is a great package. Their package is worth $86.80. They also have very generous vacation, 5 weeks. Now, when you compare weekly what these packages are worth, one is worth $18.80 and one is worth $18.46. So even though Sam looks like they're knocking it out of the park, they get to, do all these extra things. Really, to me, if it was between Sam and Fender, for me, I would take Fender's. So this is why it's so important to really consider the whole compensation package instead of just basing your decision on salary. Now, my advice is never go make the most money you can, because we all have different values in life. Some people are very money motivated. Some people want time. Some people want location. So go get the money, the time, the insurance, retirement, location, whatever it is that makes you happy, you do that. But please just make a more informed decision than focusing on simply salary. You need to understand, what is your budget? How much are you going to bring home in that location? And then how much is that total offer really worth, and find the best match for you. As always, I'm always happy to chat further once you've digested this information. Good luck.